Okay, now I think that we're actually live. So, hello everyone. My name is Vasiliy. I'm from AMLBot. I'm CEO of AMLBot, and today we will be exploring the topic of the dark side of the cryptocurrencies. Specifically, we will look into the sanctions, fraudulent transactions, stolen cryptocurrencies, and the compliance matters revolving around them. With the recent developments within the cryptocurrency space, that's been a very relevant topic. And today we actually have Niko from AMLBot and Amardeep from Chainalysis. So I think those are two perfect candidates to discuss this current topic. So I will pass word to Amardeep to introduce himself, to tell him more about Chainalysis and what he does within the company.
Thank you, Vasiliy, and good morning, good afternoon, good evening to all of you. My name's Amardeep Thandi, and I lead regulation and compliance of virtual assets here at Chainalysis across Europe, Middle East, and Africa. My main responsibilities really are supporting DeFi, CeFi, TradFi, and some of the Web3 brands and crypto native businesses, really grasping compliance when it comes to virtual assets, and really helping them on their journey of safe adoption, and obviously to combat any illicit activity.
Thank you, Amardeep. So now, Niko, please tell us more about yourself and what you do in AMLBot.
Hello, everyone. My name is Niko, and I'm a lawyer at AMLBot. I help our clients to comply with AML requirements depending on the countries they are in, and I also help to structure their KYC and AML process inside the company.
Nice, thank you very much, guys. So we have some good topics lined up for today, and without further ado, let's start. So actually, the first question, or no, rather questions, the discussion topic, I think we can start with Niko, and the question relates to the recent MiCA developments. It's been a hot topic recently. Everyone is talking about it. It's a major regulatory framework within the EU. So the question is, how will the implementation of MiCA will help to regulate the problem of the illegal use of the cryptocurrencies to evade sanctions?
Thank you, Vasiliy. Before diving into that exactly question, I would love maybe to give a perspective why we are discussing this at this moment. And this topic became very hot because of the recent Russian invasion of Ukraine, and politicians all over the world, especially in the European Union, started to started to adopt sanctions. At the same time, they were worried that the sanctions can be evaded. One of the mechanisms how the sanctions can be evaded is a cryptocurrency. But is it a really good way to evade sanctions? I've read a lot, and I heard some opinions that cryptocurrency is not the best way, or it's not that popular, because Open Ledger cannot process so many transactions like Swift messages system that process, if I'm not mistaken, 42 million messages per day. And the whole volume of cryptocurrency is not that big as compared to the traditional financial system. At the same time, we also see claims made by high politicians or representative of the banks. For example, Christine Lagarde, she said that there should be some legal framework on cryptocurrency at preventing Russia from getting around the sanction. Also, if you look at the charts of trading volume between Russian ruble and Bitcoin, Russian ruble and Tether, it soared right after the Western sanctions were implemented, as well as popularity of Monero privacy token. So, in my opinion, cryptocurrency can be used as a mechanism to evade sanctions. Another question, the rhetorical one, does MiCA really play here a vital role from preventing, but giving some legal clarity about circumventing the sanctions? And here I don't agree, because if we look at MiCA and what it is, it primarily focuses on the licensing regime for cryptocurrency, crypto asset service providers, its oversight, and consumer or investor protection. It has less to do with, let's say, anti-money laundering framework, where sanctions also part of it. But I would say that MiCA has indirect impact on it and really helps at circumventing sanctions. In which ways? The first one, I would say, that MiCA brings the homogeneous regulation all over the European economic area. Right now, if you look at the regulation of cryptocurrency business, we see that it's very fragmented. Depending on the country, we have different laws, different requirements. So right now, if we look at MiCA and the circumventing sanctions, it might be a case where the one who wants to evade sanctions would open a company, a business in a country where the requirements are not as strict, or where maybe only a registration is needed. There is a bad oversight of cryptocurrency business, and in such a way they can try to avoid sanctions. So MiCA bringing this homogeneous regulation for all European Economic Area, European Union member states, with the clear licensing requirements, with the strict requirements to get the license, would help indirectly to prevent businesses or people who want to evade sanctions not to do so. Another point about MiCA is that it has a fit and proper test for the management of crypto asset service providers. So those who are applying for licenses, they would need to satisfy this fit and proper test. So their background would be checked, etc. So this is another way how MiCA would also help at evading sanctions. And MiCA also will regulate a wide range of services. So it's not only cryptocurrency exchanges or cryptocurrency custodian wallets, but also services who, for example, provide advice on crypto assets, reception, transmission of orders, etc. So a big variety of services would be regulated, would need a license, would be better oversight. And this way, we can say that MiCA really strengthened the fight against money laundering, circumvention of sanctions, terrorist financing, etc. However, if you look in general about EU initiatives, MiCA comes along with AML package that is right now under discussion in the European Union. And this AML package is actually the key legal act that would focus on money laundering and how to not preventing and circumventing sanctions, etc. There are 3 regulations that I would love to talk about. The first one is the anti-money laundering regulation, and it actually has a direct link to MiCA that says that all crypto asset service provider would need to conduct customer due diligence, KYC of their customers, and also if they would have a cross-border correspondent relationship with cryptocurrency service providers from a third country or maybe a high-risk country, before going into such business correspondent relationships, they would need to do their risk analysis to understand if their AML processes inside the company at the same level as in the European Union. Also, anti-money laundering regulation would prohibit crypto asset service providers to offer anonymous accounts or any other accounts that can anonymize who is the real holder of the accounts. So this also, I see it as a good way how to fight against sanction evasion. Another regulation establishing a new EU AML-CFT supervisory authority also coming up soon. And that would be authorities that will help to cooperate between different, that will help in cooperation of FIU, financial intelligence units in different countries. And also this AMLA authority will have a direct supervision for some financial institutions or cryptocurrency service providers if they fulfill the criteria. There are different criteria. They need to be in at least 7 countries, etc. And the third initiative that right now is under discussion, will soon be implemented, is amendments to the transfer of funds regulations, and where we are talking about the travel rule. So we would have a threshold of 1,000 euros, above which a sender and the beneficiary of the transfer would need to be identified, and their information would need to be sent. If there is a transfer, it needs to be sent to another service provider in order to receive or to process such a transfer. So that's, I would say, AML package would play a vital role at preventing circumventing sanctions, but at the same time, there is an indirect impact of MiCA to it as well.
Yeah, thank you, Niko. So we can say that MiCA first provides a unified approach for all of the European Union countries, and this has an indirect impact on strengthening the non-invasion of the sanctions. And the second point is, you mentioned that there are another anti-money laundering directives or initiatives that are tied to MiCA, and they will have a direct impact of helping to prevent the invasion of the sanctions.
Correct, but it's a regulation, AML regulation.
Okay. It's a regulation. All right, thank you. So now let's move on, Amardeep. Question to you, it's a more of a general question, not related specifically to any regulatory framework, but in your experience, like because also it's safe to mention that we started talking about the sanction a lot when there was a war started by Russia, but as we know, not only Russia is under the sanctions. There are also other countries that have been there for years, and a lot more that probably will get there at some point in years to come. So in general, like, how do different countries and organizations evade sanctions with the use of cryptocurrencies? And how do the owners of the exchanges actually deal with those restrictions? I think your mic is on mute already.
Thank you, Vasiliy. And great question. I think, to start with, when it comes to sanctions and the kind of, typologies that are used, they are very similar typologies that have been used for decades in the fiat, ecosystems. And basically they're being used with more reliance placed on emerging technology within kind of, the blockchain space. And I think what people try and do there, and it's been tried and tested throughout, generations, is any new type of technology that comes about, there will be some sort of, exploitation attempts on that technology. So to give you an example, when cards came out, before cards, it was checks. And there was obviously fraudulent ways in which people were using, traditional financial, ecosystems in the check world, and then that moved to obviously credit cards and card cloning and so forth. And it's a very similar typology. When there's a new technology there is a lack of awareness, there's a lack of education, out there in the world, and therefore, that is pretty much what is used, in the crypto space as well. And I think, there's kind of, I guess, different types of technologies such as mixers, or there, as Niko mentioned as well, fragmented regulation, across the world, which allows for regulatory arbitrage, something that the likes of MiCA will to a certain extent, inadvertently solve. But also there are, I guess, exchanges operating in high risk jurisdictions, that may have lesser reliance on KYC and DDD processes, for example, which, obviously have tendencies to allow for illicit activity to take place. And I guess just touching on your point that you raised around, obviously, what's happened recently with conflict and the fact that, sanctions were, and have been around for decades, if not longer. When you think about the methods that have been used, when applying sanctions more recently, and some of the harsher measures, including kind of, suspension of Visa, MasterCard, PayPal, and SWIFT services. It's no real surprise that individuals or organizations or governments, or countries will turn to alternative financial systems, or means of value transfer. But really, I think, given the fact that, the largest kind of VASPs or virtual asset service providers or cryptocurrency exchanges in the world have adopted, world-class kind of on-chain compliance solutions, and the increasing regulatory clarity that we're starting to see globally, measures put in place by organizations such as, OFAC or OFSI in the UK, for example, and also combining that with some of the groundbreaking, work that we're doing in the blockchain intelligence space. I feel that it's really becoming increasingly difficult to circumvent sanctions, within the virtual asset or cryptocurrency ecosystem. And I guess, people do try and deploy methods such as using mixers or tumblers, for example, but these types of solutions are not really designed for large sums of money. And also with recent developments, we can also demix now, right? So we can actually investigate upon mixing activities. So it's not really as useful as it used to be. And I guess if you combine this with the complexities of moving large sums of fiat into crypto, I think that we'll actually continue to see other means utilized within traditional fiat-based ecosystems, potentially some of the newer mentioned networks outside of the SWIFT ecosystem, I would imagine. But just to recap, really, I think, there's been tremendous kind of efforts within the ecosystem, to counteract all of the illicit activity that's happening. And now we're really getting movement through kind of all of the regulatory authorities, the supervisory authorities. And just to give you an example, the Bank of England, Office of Financial Sanctions Implementation, or OFSI, and the FCA, the Financial Conduct Authority, have already issued new guidance to crypto exchanges or businesses related to possible sanction evasion. The first criminal prosecution involving the use of crypto assets to evade US sanctions was launched in May of last year. And obviously there are going to be more expected to follow. We're seeing a lot more movement from organizations such as OFAC as well. We're putting increasing pressures on these illicit actors as well globally. I guess financial institutions have been urged already to check if any crypto firms that they are dealing with are licensed or registered, and to freeze funds from anyone they suspect to be sanctioned individuals. But the likes of OFAC, for example, are putting increasing pressures on the entire crypto ecosystem. And the ecosystem is responding very positively. You know, we're working together, we're combating illicit use of virtual assets together. And I think just to answer the question about how kind of, you know, some of these exchanges are kind of putting in measures, I think, you know, the start of that is to look at, you know, some of the recommendations made by FATF, for example, including kind of some of the red flag indicators that suggest an increased risk of sanction evasion. You know, for example, customers who are residents in or conducting transactions from jurisdictions subject to sanctions or high-risk countries is one kind of form. I think another, you know, is kind of transactions from wallet addresses associated with sanctioned entities, or potentially, you know, involving crypto asset organizations or wallet providers with poor CDD procedures. So, you know, and then finally, I guess, the use of concealment techniques, as discussed, mixers, tumblers, proxies, and so forth. I think all of these present, you know, typologies that can be observed, you know, as indications of increased risk. And these are the kind of things that organizations are using, you know, to put in place measures and compliance frameworks when it comes to managing those risks, when it comes to virtual assets. And I guess it's the work and the great work done by the blockchain intelligence organizations globally that are supporting that activity as well, and making that, you know, that process a lot more manageable, you know, especially with sanctions and the increased amount of you know, SDNs or designations made by some of these organizations globally now. We continue to see that, and we will continue to see that happening. And I feel that, you know, a timely update of these intelligence platforms, as seen, you know, typically in kind of the fiat world and with some of the solutions and the tech stack used by the TradFi, you know, global institutions, it's very important to have these updated as soon as possible so that we can, you know, put in place those measures and support the compliance solutions that these organizations, you know, have.
No, thank you for that, Amardeep. So definitely, yes, the sanction have been here probably before the cryptocurrency was invented. So the methods and the techniques that are used with the traditional fiat, also by leveraging maybe not a sufficient knowledge of the cryptocurrency by some institutions, are also applied the cryptocurrency. But as you said, with the help of blockchain analytics and due to the nature of blockchain, what it is transparent, and even that it may seem that it's anonymous, but with a certain degree of analysis, you can attribute the certain addresses to the certain entities and do kind of this in-deep, intelligent analysis of the blockchain, and ultimately help to prevent using cryptocurrency as a leverage to evade the sanctions. So, yeah, thank you very much for this detailed reply. And now let's move on to our third question to Niko. So what measures can be taken to prevent the cryptocurrency from being used as an instrument to evade sanctions? I think Amardeep has already mentioned some. Maybe Niko, you can also add something to that. And can you actually provide some real-life examples of virtual asset service providers, which are like exchanges, exchange services, basically almost any service that deals with cryptocurrency, implement various methods to stay compliant? So how they can protect themselves knowing that this user is not under the sanctions?
Thank you for your question. And as you mentioned, Amardeep already touched upon the first half of the questions. So I think it was very well answered. I will focus on the second part of the questions, meaning what crypto asset service provider must do in order to prevent its services being used for sanction invasion. If we compare cryptocurrency service provider and the traditional financial institutions that work only with fiat, I would say that crypto asset service provider need to go extra mile in order to stay compliant. Why? Because when we're talking about sanctions and what institutions that deal only with fiat currency do, basically they do just a name screening. So they see if a client, whether it is an individual or a legal entity, is in the sanction list or not. Of course, there also might be some situations where different companies who are not on sanctions but dealing with the sanctions company, etc. But the main requirement of such institution is basically to screen its customers against sanctions list, and that's how you mainly become compliant with a sanctions invasion. For crypto asset service provider, it's not enough. Why? Because we also have sanctions in blockchain, in crypto sanction against the individuals, but who also have funds in the blockchain. So we also have sanctions, cryptocurrency wallet, etc. Therefore, crypto asset service provider shall not only do a name screening like traditional financial institutions, but also deploy blockchain analytics and screen cryptocurrency transactions and crypto wallets on sanctions, whether this wallet is sanctions or whether the cryptocurrency that is transacting has some amount of sanction, it's some part of this cryptocurrency where under sanctions or where dealing with the sanctions individuals, etc. Therefore, CASPs need to have two data, at least two database, ones for name screening and another for blockchain analytics.
Niko, maybe just to mention for the listeners, you mentioned CASPs. This is a definition per MiCA, and I was mentioning VASPs. This is a definition per FAT. So if you can just make this little distinguish so everyone can understand.
Basically, it means the same. VASP is a virtual asset service provider, and the CASP is the crypto asset service provider. But this is the same meaning. And in this regard about this blockchain analytics, I would love also to mention that this anti-money laundering regulation that is under discussion right now in the European Parliament might be a case when they also include the usage of blockchain analytics is one of the way to stay compliant. I mean, especially when a CASP is dealing with unhosted wallets. So, when there is an unhosted wallet, that it's difficult to understand who is behind this cryptocurrency wallet. And at the same time, CASP does not want to allow the transfer to this wallet because this wallet might be sanctioned or might belong to such individuals. So they might need to screen this wallet and to see if this wallet contains any risks, or it's let's say white wallet and the transfer can be allowed to this wallet. So right now it's under discussion, and it might be the case where blockchain analytics will be included in the text of the AML regulation as one of the way to be sure that if the CASP is dealing with the unhosted wallet, this unhosted wallet does not pose any risks. Summarizing what I said, I think in order to stay compliant for the crypto asset service provider, they need to have regular name screening as we have in traditional institutions, blockchain analytics to screen transactions and wallets. And also, of course, my recommendation would be, not legal advice, just my opinion, do not also work with privacy tokens such as Monero, because it's difficult to track it and it's difficult to understand who is behind it, or Vasiliy wallets.
Actually, I picked into the chat and we already had a question about the privacy coin. So after we finish with our questions, I think it will be also a good question to tackle. Yeah, thank you, Niko. It's pretty interesting. We have two more questions, so I'll move a little bit faster. So this question for Amardeep. It's not a secret that cryptocurrency is getting into all of the aspects of the human life, and especially talking with finance. When we're talking about the charity donations, it seems like a very easy way, to conduct a charity, right? Because for the traditional charity, you might need to have a bank account, and then when you have a lot of funds coming to your bank account, your bank may have questions with cryptocurrency. At least at the first sight, it's easy. You just create a wallet, give the wallet to a person, and receive the donations. So what kind of fraudulent schemes take place with charitable donations in cryptocurrency to help countries in need? What do you think?
Thanks, Vasiliy. Yeah, I think firstly, it's a real big shame, obviously, that there are, illicit actors like this that obviously, in times of crisis, see this as an opportunity. But I don't want that to overshadow the beauty of virtual assets in time of crisis, what they can do and what they have been doing. As you've probably read all over the newspapers, the fact that there's been a number of situations recently with conflicts or with natural disasters that have taken place. And when as you mentioned there, when a charity needs to be set up and have the typical measures of receiving donations, when that's taking off the grid by any means, or it's not possible to access that, whether it's by conflict or in a case of natural disaster. In these times of crisis, there needs to be some other means to be able to, either, exchange payments for certain services, or other means to be able to purchase certain things. And so I think that, given the way that the world operates, I think this is a great example of how the world can come together in times of crisis and really help out, how they can. But also, I think, in any times of need like this, there's going to be opportunists around. And so it's your responsibility really to just make sure you do your own due diligence when you're sending cryptocurrencies, if you are to charitable organizations or in times of crisis. And I think it's exactly the same as how the typologies are used within evading sanctions or your typical fraud typologies. It's the same process. It's used commonly in the cyber space, whether it's masking of wallet addresses, cloning of websites. It's the usual kind of means that these actors use, and so it's important to obviously look at do your due diligence on the wallet addresses, make sure that it's mentioned in more than one place. And doing that kind of initial digging and due diligence will obviously help you to understand whether or not that address that you're sending funds to is the address that you intend it to be. But I just wanted to obviously make sure that I bring home here that that there's a lot of good that's been done with these donations. In times of crisis, it is reaching people at a significant pace, above and beyond the traditional means of providing donations. So it's something that will continue, and it's something again that just needs to be managed well in terms of the risk, and that's what we're here to do.
Yeah, exactly. Yeah, thank you. Again, there is a pros and cons, right? It's easy to collect, but there are a lot of people that are doing very unethical stuff. So if we can find the ways to manage it effectively, I think it will be a great good for everyone. And the last question that we actually have, it's more of like discussion questions for both of the participants, and it relates to, of course, sanctions. And the topic of sanctions is very, very complex. And the more people start to dig into it, the more questions, especially as time progresses, the more questions arise. And the question is like this. So especially in terms of the cryptocurrency entities that are getting put under the sanctions, there is this notion that, for example, if I'm a user, if I'm a general cryptocurrency user, and let's say I'm not on the sanctions list, but I have interacted with an entity that is now on the sanction list, but my interaction with this entity was prior of this entity being on the sanction list. So is it fair that I should be in trouble now when this entity is already on the sanction list? However, my interaction with this entity was before. And let's say as soon as I learned that this entity is on the sanction list, I stopped interaction with that. So what is the general thought in this area?
Niko, I don't know whether you want to take it first or you want me to?
If you want, you can go, or I can also go.
Yeah, so I think, it's an interesting one. I think, Niko, you hit the nail on the head earlier on in the conversation about the fact that, cryptocurrencies and blockchain networks, especially obviously the public ones, present us with, a different situation to the TradFi world, right? We have a lot more visibility in transactions. And so, as you discussed earlier, the screening takes place in the traditional financial world, and if it's screened and it passes, it goes through. And I think this unique kind of situation, again, there's pros and cons in everything. And I think the increased transparency that we have within blockchain networks and our ability to look at previous transactions has presented this unique challenge to us in the space. And I think to a certain extent, I always, look at a case-by-case basis when you're looking at obviously these exposures. And I think that's what the industry tends to do, is take it on a case-by-case basis. But you wouldn't have this level of transparency when it comes to bank transactions, for example. And therefore it needs to be managed, because otherwise you can go down a rabbit hole quite quickly. And really you could spend hours, if not days, in looking into individual kind of, scenarios and cases. So I think it's quite an interesting one. The developments in the industry and ecosystem in terms of blockchain intelligence and analytics has been that, once we've identified a sanctioned entity, that kind of exposure or attribution is made to that wallet address and subsequent wallet addresses that have had association with that, you can see that exposure. And I think where the industry has moved has been that, to apply a date of the exposure, then provides you that information that, the designation was on this date, and therefore any transactions prior then to that, is deemed as, as prior to the knowledge of the designation. But that said, obviously, when you're observing certain wallet addresses on a case-by-case basis, if you've seen an increased amount of activity with something, that has been sanctioned, and you now know it to be, a .NET marketplace, for example, then, that might then present, risks that do not fall within your risk appetite of your business. And therefore, there are actions to be taken and obviously observations to be made there. So it's a very interesting question.
I agree. It's interesting. At the same time, it's a difficult question to answer. And definitely every situation needs to be assessed on a case-by-case basis. We need to take into consideration what type of sanction has been adopted, why, etc. Coming closely to the example that you, Vasiliy, mentioned, that a user that was contracting with the entity that afterwards was sanctioned, etc. I think in this specific example, we need to look at what kind of sanctions has been implemented. Is it merely sanctions because the entity that was sanctioned belonged to a specific geographic area and that's it? Then I think that the user should not worry a lot, because that sanction is not against this entity, but just this entity is in the specific country. As we know, the sanctions might be also against the whole country, and interaction with any kind of business is prohibited. But if the sanction against this entity was implemented because of this entity, I think that the user should not because this entity was largely involved in money laundering or some other illicit activity, and if this user or business was interacting a lot with this entity, there is a high risk that this user or entity was also involved or at least touched the cryptocurrency or funds that have some illegal source, let's put it this way. And in this case, if the user can prove that he was doing nothing illegal, but just merely interaction with this entity, then maybe there is nothing to worry about. But if the entity was largely or only famous for laundering money, for processing, exchanging stolen coins, etc., and you are using this cryptocurrency or this crypto service, then there is a big risk you are also involved in this is some kind of illegal activity. So it's a difficult question. Definitely needs to be assessed on a case-by-case basis, and also it will depend who actually assess. Is it the AML authority, financial units, or it's the bank that the user wants to transfer its funds to from the sanction entity, etc. So there are many questions that needs to be clarified in order to give the answer, but yeah, case-by-case basis.
Yeah, thank you, boss. I completely agree. There are like so many things that are in play. Was this entity already a high-risk entity, for example, and then sanctions is just cherry on the top of everything, or was it a regulatory compliant entity that unfortunate, and also like what was the user and so on. Yeah, so again, a lot of things are in play. So thank you very much. So now we have exactly 15 minutes to tackle some of the user questions. And then let's see. So the one that I liked, it's actually kind of an interesting question. Maybe it's about some basics of how blockchain analytic firms works. So maybe it can be a question to Amardeep. So actually, who regulates you, meaning like Chainalysis, about its algorithm bias to declare unsafe or safe funds, degree links to target addresses? So if I would kind of rephrase it, so how do you base your analysis, and is there any guidance that you use when you're doing the blockchain analytics, let's say?
It's a really important question, and it's something that we as a business take very seriously. I think, when it comes to our data, it's obviously the most important part of the business, right? The data lake that we sit on, and the process that we use for verification is something that we have sometimes actually more than our competitors have as employees for their whole business. We have just to verify the data and the attributions. Now, obviously, there's certain degrees of data attribution verification. You will have, if there's something that's been flagged up by law enforcement, for example, then there is a safe degree to say that that is something that is verified. But we don't just take data from online, for example, and then scrape the data off and understand, okay, well, this has been mentioned as a scam, and therefore it must be, it's a process, a very in-depth process that goes on to verify these attributions. And it's something that, to a certain extent, we are able to provide all of the information on how that address has been attributed and being assigned as a certain categorization. And that's important because sometimes in either criminal cases or any other cases, this data is relied upon in court. And so therefore you need to be able to stand up in court and stand by the data that you've attributed. And that's why this information that we have is recorded. There is a full audit trail in the background, and that is the audit trail or the report that is provided, say, if something does end up in a court and there is, questions around the data, because there always is questions. So I hope that is helpful.
Yeah, and I mean, even though I don't work in Chainalysis, but I would add for myself that even the fact that most of the government agencies and stuff rely on your data already gives a validation that your data is well respected and accepted. So I think it's also a big plus. Okay, so then the next question will be for Niko, because he already touched the topic of the privacy coins. So maybe here you can go a little bit more in depth. So what are the risks associated with privacy-focused cryptocurrencies such as Monero, Zcash, and how can businesses ensure they're not inadvertently facilitating criminal activity using these tokens? So maybe just from my side, I will also add that you see sometimes the privacy coins get delisted from some of the exchanges, but some of the exchanges still keep them.
Listing the privacy token, dealing with privacy token always poses to you, a business, to a greater risk than not to deal with these tokens. We know that blockchain is a public ledger. It's easy to trace funds, to see who is interacting with whom, etc. Using Monero, you don't see this data, and you don't see who is a sender or receiver. Therefore, it might be a case if you are a crypto asset provider and you offer Monero services, that your client might be under sanctions because you don't know with whom you are interacting, etc. Or this Monero might be coming from some illegal source or illegal activity. Therefore, you mentioned that there are many, especially those exchanges that are licensed and are licensed in a good jurisdiction, the jurisdiction that has a regulatory framework for good AML regulatory framework, as well as a regulatory framework for cryptocurrency, crypto asset business. They do not work with such tokens. Moreover, I am also aware that there are cases that if a crypto asset service provider would love to open, for example, a bank account for its fiat services, then bank might also ask questions: do you work with privacy token? And if the business works with privacy tokens, bank might not want to onboard such a client, because for a bank it would mean that there is a great exposure that their client would be involved in some illegal activity. So we see the market practice, especially coming from the regulated players on the market, crypto players on the market. They rather not work with privacy token than to list them and to offer them to public.
Yeah, so we can agree that privacy coins pose a bigger risk to especially very well regulated business. Okay, so the next question I think also will be to Niko, because it's concerning the travel rule. So who is responsible to give info about the beneficiary to the CASP, and how does that go together with data privacy regulation like GDPR? So I think the question is the connection of giving the data away, because with the travel rule, obviously, you need to identify the user, similarly like you identify the user when you do a bank transfer. So how does it tie with the GDPR, and who is responsible to give this data to CASP?
Let's put it this way: if there is a CASP and there is a transfer from this CASP to another CASP, so in order to make a transfer, the CASP would need to share the data to another CASP about the originator of the transfer. And of course, the CASP need to have the data about the beneficiary of the receiver of the transfer. So the beneficiary data might be entered by the person who is doing the transfer, and the originator data should be already in the CASP because it's a client who is making the transactions. In terms of GDPR, I don't see here a big risk, or because it's not transacted on blockchain. Maybe that was the questions, thinking that the data would be somewhere in the blockchain. No, the identifiable data would not be in the blockchain. For travel rules,
I think maybe just to clarify, if I understood the question correctly, I think the question is here, for example, I think it's like a classic question. So if I will go to the bank and due to GDPR, tell them to delete all of my data, right? To delete all of the records that I have loans, you cannot do that, right? Because this falls not within the GDPR. So I think the same applies to the travel rule, right? Like the information about you must be transferred per law. So it cannot be not transferred as per your request, if I understood the question correctly.
So if you ask me in such a way that you just mentioned, then we don't have any problems, because yes, GDPR is about protection of personal data, but we also have the AML legislation and the requirements to keep the integrity of the financial system. And one of the AML requirements for obligated entity is to have identifiable data of the customers, keep it for at least 5 years, depending on the jurisdiction. And if it's needed for the transfer, then to also share it with the third parties. So that is made on because there is a legal necessity to do this, and then there is no problem, no breach of GDPR.
Just to add there, I think I had a talk a couple of days ago on this, and there was quite an interesting spin on this, where I think the obligation, or say the risk, would be where maybe a CASP or a VASP, would be interacting with maybe an unregulated organization, or an organization that's in a high risk jurisdiction. And I guess to a certain extent, the the data that's going to some sort of unregulated organization, the risks are greater there for potentially cyber ransomware attacks and leaks and so forth. And so the concern there is, if I'm putting my data in and you're sending that across, how can we prevent that being sent across to maybe some sort of bad actors / dubious unregulated organization? And I think that obviously the onus becomes that of the CASP that has your information and that you are using, because obviously they have their own due diligence and onboarding activities that they conduct to ensure that to a certain extent they're operating with certain organizations. But when it comes to obviously you say, for example, sending funds to something that's of an unknown entity or service, then obviously there are greater risks there. So there's definitely challenges that we're going to need to overcome, I think, with the travel rule. But I guess that's probably a question for another day, because we could probably spend a good hour just on that topic itself.
Yeah, right. All right, we have about 4 minutes left. So maybe we can do 2 last questions. This question is a bit more specific, a bit more technological. Either of you may have an answer to it. So how do companies use machine learning algorithm to improve their cryptocurrency compliance and risk management capabilities? And what are the advantages and disadvantages of these approaches?
Yeah, I can take a stab at that, Niko. Yeah, Vasiliy, it's a very interesting question. I think, there's a lot of talk about AI right now, especially with ChatGPT and kind of certain things in the AI space that are in some ways revolutionizing the way that people operate. I think when it comes to blockchain analytics, to a certain extent, the data, there's a difference between the data quality, whether it's deterministic or whether it's derived from algorithms, right? I think that's the first important factor to understand. If you've got an AI algorithm and you're using that to make your attributions and to a certain extent, there's assumptions made there, with technology. And the other aspect is obviously deterministic data. So, when you're really, making sure that all your data is verified, that data is deemed as a higher quality. And so you need to really be aware of the differences there. There definitely are, obviously, I would say more on the con side of using AI algorithms and so forth, because at the end of the day, if there's not a certain verification that's taking place, then you're placing reliance on technology, and to a certain extent, as I've seen previously in my past as an investigator, that sometimes can't stand up in court. It depends on the algorithm, how they're used, and the understanding of those algorithms. And so at the moment, I think you'll find that as you mentioned before, the regulators, the law enforcement, the government agencies of the world are placing reliance on good quality data. That good quality data is deterministic, and that's the type of data that we offer.
Yep, thank you. I know this question about the AI becomes very, very relevant in the past days. The ChatGPT actually released the 4th version yesterday, so I think there will be more questions like that in the future. So the last question again to both of you: how can businesses and general users, investors stay up to date with the evolving regulatory landscapes of the crypto industry, and what resources are available to help them navigate this complex environment? So maybe your personal tips, what do you use, what do you suggest, how to stay up to date?
How to be up to date with all this regulatory new changes that we have all yeah.
Like, what are the resources?
Check the official website if you are operating in a specific jurisdiction. Just check the official news of the parliament, what is going on. I'm sure there are many organizations, associations that focus on new regulation. They are also discuss it before it actually gets implemented and adopted, tries to give its opinion, etc. So it's merely just Googling, talking to people, visit special Twitter accounts or other groups that give this insights of what is going to happen soon in the regulatory framework, etc. I know that there are for cryptocurrency. I know that for cryptocurrency business, I see also right now in the market that they are looking for regulatory experts, etc. Those who are actually analyzing what the new regulation would be, how it would impact the business, so the business would be already ready once it's adopted.
Yeah, I'd just like to echo that. Really, it's obviously quite difficult to keep on top of all of the different regulations happening globally. especially in a very complex ecosystem with new technology developments, coming out all the time as well. So yeah, I would definitely agree with Niko in terms of, there's social media presence out there. I would, always go to places like LinkedIn, for example, over some of the Instagram accounts that you can follow, because there's tends to be more reliable information on the likes of LinkedIn, for example, and there's some great resources there with following the right associations globally that provide quite good recaps or updates on a regular basis of all of the different new areas. And if you haven't read the new VARA guidelines, I would just suggest reading those as well. They're very progressive, and it's the Virtual Asset Regulatory Authority in the Middle East. It's their latest guidance. I think that provides a very good future thinking look and progressive look at how the world will come together and regulate effectively virtual assets or crypto assets.
Yeah, and of course, watching webinars as we have today, because our webinar that we're doing today is actually a series of webinars where we talk about compliance and cybersecurity. You guys in Chainalysis also doing podcasts, webinars, ton of the useful stuff that people can access for free, educate themselves, and then stay on top of it if this is something that they're really interested in. All right, guys, thank you very much for a very nice, very juicy, I would say, webinar. Tons of the insights were shared, and I hope that everyone who watched got something out of it. So if you still have any questions, feel free to write to us on our socials at AMLBot. Feel free to contact Chainalysis as well. And thank you very much for watching. We will have a new webinar coming up soon as well. We will announce it and let everyone know. So yeah. So thank you very much, guys. Niko, Amardeep, been a pleasure today, and I wish you a good rest of the day. Thank you.
Thank you, Niko. Thanks,
Yeah.
everyone.
Bye-bye.
Thank you very much. Bye-bye.